tremendous opportunity from NanoDimensions. Check it out. We have the market cap currently at only 831 million after this huge price drop we've been seeing over the last few months, sitting now at $3.24. But look at the balance sheet. Cash and cash equivalents of 1.1 billion. This is a situation we call trading below cash. Is this basically a free company? If we buy it now, are we guaranteed to win? What's the deal with NanoDimensions? Today, we're going to take a look at who they are, what they do, what they're known for, what they're special for. And we're also going to take a look at some of the concerns I have, which actually are really alarming. We're going to look into the leadership, we're going to look at the patents, we're going to look at share dilution, and we're also going to look into some of the failures that I think are kind of deal-breaking for me to invest right now. But before we get started, NanoDimensions invites us in their investor presentation. Should you decide to invest, you will invest in a balance sheet. So, on the channel, we've been talking about Desktop Metal recently. They are in the additive manufacturing industry. And we've seen, Meet Kevin is investing in NanoDimensions, ARK Invest, Kathy Wood. A lot of big people are talking about it. And I'm kind of like, what's the big deal? I've never really been that excited about it. What do they even do in the first place? They've provided a quick video, which is going to explain it more concisely than I think I can. So check it out.
Our Dragonfly 2020 3D printer is capable of depositing both electrically conductive and insulating materials, enabling designers and engineers to print fully functional electronics in-house in one print job. Companies are already using this multi-material solution to bring speed and efficiency to their development and manufacturing processes, reduce lead times and cost, and create opportunities for design innovation.
So we're looking at fully functional electronics in-house in a matter of hours. And in a lot of cases, I think the application will be prototyping. And so when you think of 3D printing, when I think of 3D printing, I think of I can print out parts for my car. I can print out furniture and stuff like that. And the applications are going to be growing more and more and more. There's already 3D printed houses that are happening now too. But NanoDimensions, I think, is not trying to reach that huge market appeal. And I think they're not trying to replace factories. They're basically talking about being able to 3D print high performance electronic devices. And I think there are a lot of applications for that, but I think what NanoDimensions is trying to do is probably a little bit different from a lot of people are thinking. And I think the use cases are probably more limited, and we're seeing in the revenue figures and in the growth figures how, it might not be, I think, what a lot of investors are getting excited about exactly. And again, going back to what I was mentioning earlier, here we have some of the big funds that are invested in ARK Investment, BlackRock, Susquehanna. These are all big names. ARK owns 7.6% of the company. And I think right now it's a tricky situation for ARK Invest because they've been clear from the beginning, hey, everybody, all the things we're investing in are only going to pay off in the next 5 to 10 years. And in the short term, 1 or 2 years right after the market hits all-time highs, they're getting hammered. I say give them a little bit of a break because it's not 5 or 10 years yet. I don't know, unpopular opinion, I know. That's just me. But anyways, so here's NanoDimensions market. They're talking about additive manufacturing of electronics. It's not just additive manufacturing of any old thing or, everything. So they're saying the 3D printed electronics market expected to be worth 2.4 billion by 2025, which is, not the world's biggest market. I think when a lot of people start to get really overexcited about the stock, it becomes a hype monster, and the valuation of the stock's already been worth billions and billions, And so when they're saying the market of 3D printed electronics is going to be worth 2.4 billion, that doesn't mean they're going to control the whole thing, And so checking back here, they're saying the market will have a 44.6% projected CAGR until 2026. And the market's still growing really rapidly, and we think we can be one of the leaders in this industry. They go on to talk about some of their current customers. They have defense, aerospace, medical, research, automotive, and industrial. Numerous names here, including the ubiquitous, the US military. 3 multi-billion-dollar US defense manufacturers, 2 European defense manufacturers. So I think they're clearly providing value for these very niche customers who need to be doing high security, in terms of intellectual property, high security prototyping and figuring out how they can develop on their systems and improve their systems, specifically with additive manufacturing electronics and boards. And going on into the testimonials, check it out here. L3 Harris, second from the left, the ability to manufacture RF systems in-house offers an exciting new means for rapid and affordable prototyping and volume manufacturing. And then the one next to that, Hensel, to have high density components quickly available with reduced effort by means of 3D printing gives us a competitive edge in the development process of such high-end electronic systems. And so don't be confused and think that NanoDimensions is trying to take over the whole 3D printing industry. They have very specific applications, and yeah, maybe in 10 years, these will start to become more ubiquitous, but I'm not sure it's what everybody thinks it is. Now, what is a tech company without any patents? It's probably not very significant, and they won't have any moat. NanoDimensions is starting to get patents. Part of their big strategy was to get patents and stack up a lot of cash so that they can use that to make a lot of strategic acquisitions. So check it out. Currently we hold over 106 patent applications. Applications doesn't mean patents. Applications means we are applying for them. And correct me if I'm wrong in the comment section, but I'm not sure it guarantees that the patent is coming through. They have 18 US granted patents. And the Fabrica Group, which is an acquisition I'll get into here in a minute, entailed 6 additional patents. So we know that the company is not super huge. They don't have a super huge target audience or TAM, total addressable market. And they only have a few patents too. Let's keep going. Here's a quick look at a couple of the patents they have. Pulsed light emitting diode sinterings. Sintering is like when you're baking the product at the end to complete it, to bind it all together. Double-sided and multi-layered printed circuit board fabrication using inkjet printing. Chip-embedded printed circuit boards and methods of fabrication. Inkjet printing of 3-dimensional ceramic patterns. And that ceramic patterns isn't like, you know, my mom made a ceramic pot. Ceramic is an insulator that's used on circuit boards. And I think this one in particular is really big. Chip embedded printed circuit boards and methods of fabrication. So imagine up until now, you know, when computers have boards or, you know, different kinds of hardware have boards in them with all different kinds of chips. That's a really tremendously difficult and complicated process, many times taking parts from various different manufacturers and then assembling them together on a board and then putting that into the computer or the printer or whatever it is. In these guys' case, they can just print all of those things at the same time, and not only just one board at a time, but 3D, and therefore a lot more bang for your buck, a lot more capability. And this opens up whole new dimensions of how much processing can happen in a really small space. Check it out here on the right side. They have the traditional process, like I was just mentioning, all these different steps. You know, you have plating, you have drilling, you have metallization and all these different things. And once it's finally done, after going through all the beta tests and all the prototyping and all that stuff, then you can finally ship it. On the left side here, we have the new process. CAD prep, AME process, electrical test, FQC, shipment. So it's like very, very streamlined, and I can see how they'll be providing value. And I think in the future, like not like next quarter, but like in 5 or 10 years, if this company can survive and if they can start to provide enough value without, you know, losing kind of the meme effect that's going on for their stock, maybe we're going to start to see things exploding in the coming years. But let's take a look at some of the concerns I have. First of all, revenues, you know, and I'm not the kind of guy who's going to beat up on a small pre-revenue company and be like, your ratios suck, you have too much debt, you don't have enough cash on hand or anything like that. But check it out. I think people, right now the stock is worth $800 million and people are considering it massively sold off. But check it out. They've had $17 million in cumulative revenue since 2018 up until the middle of last year. It's an $830 million stock, and they have $17 million of revenue over those many years. Many years, dude. Now we see that trend is starting to pick up in the most recently kind of completed year here. This figure, check out the quarterly revenue down there on the bottom, starting with the oldest on the right, going to the newest on the left, $1.34 million in revenue. So when you're saying, oh my gosh, this company sold off so much, it's only $3 now, you got to look into the details of it. Yeah, these guys could change the world in 5 or 10 years, but so can many, many other companies. And so you got to be careful, because just because the price has plummeted from $70 down to $3.24 doesn't mean it's a good deal, doesn't mean it's a screaming bargain quite yet. Going on and looking more at the revenue and operating income, we're seeing the red there. Operating income is getting more and more negative each quarter as we go on. Revenues aren't even necessarily trending up. Gross profit is a little bit more stable than it's been in the past, but operating income just seems to be getting bigger and bigger. And here is a deeper look into those operating expenses, which are driving down the net income. R&D is going up, not a bad thing for a new company. Sales and marketing, required and necessary. General and administration is probably fair, but R&D, it's hard to say how much R&D is going to pay off. But for me, generally, my position is I'm going to trust the pros. I'm going to give them the benefit of the doubt, and I'm going to hope that that R&D will pay off in the future, especially for brand new companies like this. Next, probably a really big red flag. Now, again, I haven't looked into all of the precise details of every single news headline in this company yet. Let me know down in the comments section if you have. But check this out. We have shareholder dilution to the max. Look on the top there in the black. This is year over year, starting in 2018 on the right side, 3.2 million shares. Then a year later, it had doubled to 6.4 million shares. So if you owned a share in the company, now you own 0.5 shares, basically. And then a year later after that in 2020, 257 million shares. Why are you diluting the shares so much? Why do you need so much money? You know, we look at the balance sheet I was showing you at the beginning of the video. So much cash on hand. Oh my gosh, this is awesome. And we know that part of their strategy is to try and go and acquire companies. But it seems like they haven't been successful in that. So having a lot of cash on hand is like nice. But if it's just going to sit there and do nothing, what's the benefit of it? Can you grow the company? And we'll get into that a little bit more here in a minute. But first, I also wanted to touch on the leadership of the company. I'm not seeing a lot of people talk too much about this, but the CEO, Yoav Stern, has actually like not a super good record. You know, check it out here. We have potential issue number 1, extortion attempt. This was a few years ago when he was running a company called Magal. So this is an accusation. It hasn't really been necessarily clearly proven, but we have attorney Avigdor Klagsbald wrote a letter earlier this week on behalf of Nathan Kirsch, who is Magal's largest shareholder, accusing Yoav Stern of attempted extortion. Stern is a former Magal executive who heads a group of American investment funds that is seeking a takeover of the company. According to Klagsbald's letter, Stern asked Kirsch, who owns a 24% stake in Magal, to abstain from the shareholder vote, in what Stern's letter reportedly termed an elegant solution before things get too dirty. Extortion by the CEO of my Nanodimensions? It's not a good look, guys. Moving on, here we have Yoav Stern on the right side. Says, third line down, executive chairman of Kellstrom Industries, Incorporated. And check it out here, an article from Haaretz on the left side. Kellstrom Industries, the Defense Ministry's strategic partner for marketing Israeli Air Force aerospace equipment globally, has collapsed. Now, that's not a moral failing, and I'm not going to get too down on somebody for having some kind of business failure in the past. In fact, this entire YouTube channel, my first video ever, was talking about the importance of failure. And so I think failure is really important, and I'm not necessarily saying, dude, we should write this guy or write this company off because there was a failure. But when you have big failures like this, especially ones that work alongside the government in Israel, it's something to take note of, I think. Okay, so we know that they have a huge cash position, and we know that their strategy is to try and acquire companies. Check it out here. Sorry, 3-pronged strategy. Accelerated R&D. Number 2, customer-centric go-to-market. Number 3, synergetic. I think that's supposed to be synergistic. Super professional. Mergers and acquisitions. So part of their goal is, you know, hey, we have all this cash. Now we're going to go out and buy up a bunch of companies so we can grow multiplicatively. How has that gone, you ask? Check it out. 170 plus target companies later, not a whole lot of success. And here they say these are all the reasons those didn't work out. But let's take a look at some of the ones that did go through. Check it out here. We have a list from Benzinga Pro breaking down all those acquisitions, and you can click on them to learn more. Down in Benzinga Pro, link down in the description there. Number 1, probably the most significant, the one they seem to brag the most about, is the robotic brain DeepCube. It was acquired for their deep learning and machine learning technology to be applied in synergistic fabrication and end users areas across additive manufacturing. So they're saying gathering all of this data, training the robotic brain or the deep cube to optimize, the builds, to optimize what they're trying to 3D print is going to be really good. And this is one of those things that I feel like is like one of the buzzwords going on in the industry right now. It's kind of like, EVs, oh my gosh, it's an EV company, let's invest in it. Throw all of our money at Rivian, who has no money, kind of thing. The word AI is like, oh my gosh, they're using AI, like, let's invest in them really heavily. It's going to be the future. Like, I feel like it's hard to evaluate AI. That's kind of like saying, hey, our cars have batteries. It's like, yeah, is it going to run the car, or is it like a 20-year-old hybrid? Like, what's the difference? There's a huge difference, even though they're electrified vehicles. In this way, they're talking about AI and they actually hype it up a lot in their investor presentation, but it's really hard to see the actual value of it unless you're maybe like an end user or something like that. Taking a deeper look at the 3 acquisitions that have gone through, I'll read these for you because it's a bit of a word fortress. Number 1, GIS. Based in Cambridge, UK, is a leading developer and supplier of high-performance control electronics, software, and ink delivery systems. Founded in 2006, the company is well known for inventing and delivering state-of-the-art 2D and 3D printing inkjet hardware and unique operating software. GIS has more than 130 customers around the world, with a focus on high-value, precision-oriented applications such as specialized direct-to-container packaging, printed electronics, functional fluids, and 3D printing, which can all be controlled by the proprietary software system. Basically sounds like a smaller version of what NanoDimensions is already doing, plus maybe even a little bit more breadth, a little bit more market breadth. Number 2, SMTech's product portfolio is comprised of production equipment for placing and assembling electronic components on printed circuit boards, or PCBs. They were a leader in adaptive, highly flexible surface mount technology, pick-and-place equipment, sophisticated dispensers suitable for both high-speed and micro-dispensing, and intelligent production material storage and logistics system. Its products are equipped with a sophisticated software package, which makes extensive and efficient material management possible. SMTech's specialty is placing and assembling electronic components on printed circuit boards, so I'm not sure precisely how they overlap or how we'll see synergistic benefits, but I'm sure NanoDimensions does. The third completed acquisition was NanoFabrica, is a prominent player in the field of precision digital manufacturing. Its industrial additive manufacturing systems have an unprecedented micron resolution with ultra-fine features, details, accuracy, and precision, enabled by the innovative micro-adaptive projection technology. NanoFabrica brings the power of additive manufacturing to applications that require high precision, overlapping the typical target markets of NanoDimensions. So they go on to talk about how it can be used in aerospace, aviation, and all these other super duper micro applications. And that sounds really neat. That sounds really important when basically all of our devices are getting more and more powerful, yet smaller and smaller and smaller. So being able to print really, really micro sounds like a really good ability, especially for a company like NanoDimensions to have. So it sounds like even though they've completed a couple of acquisitions, one this year, and I think 3 of those were last year, 2020, it sounds like there's still a lot of work to be done. We're not seeing revenues start to take off yet. I'm not sure how much their team is growing, but when you can see like the slide I showed earlier, they still have 1.2 billion in assets. And yes, the market cap of the company is less than just the cash, but I'm concerned because this company's already been doing their thing for like 3 years now. They have the whole game down, like press releases all the time, marketing, and getting a lot of big names to talk about it. But I'm frustrated by how little progress has been made, despite the massive, like, I can't even imagine more share dilution than this, and it's kind of like, when are you guys going to get your act together? I'm not sure I can trust them, and I haven't seen enough growth start to take off yet to believe that they can firmly actually grow for real for 5 or 10 years. And so my concern with this company is that it's, a bit of a hype monster, a bit of a hype beast. A lot of people talking about it on YouTube. You look on YouTube, there's like hundreds of videos of it. So many different famous people, Meet Kevin and all these people, are investing in it. And it's like, go check out Desktop Metal. You guys need some Desktop Metal in your life. In fact, why don't you just click on this video right now? Love you guys and talk to you soon.